This is LCDJ from Forex and Talent SA. LCDJ from Forex and Talent SA. One question, guys. One question that I get the most, and that question is: what do you see that the majority fails to see when it comes to VIX 25? How are you always almost on the money when it comes to VIX 25? So I decided to do a short video to clarify some confusions, or to give you some insights into VIX 25 trading. Today we'll be focusing solely on the structure of VIX 25. We will be overlooking or not taking into account the statistical, the economical, or other factors affecting VIX 25. We'll be focusing solely on VIX 25, on the structure of VIX 25, how it performs, how it behaves, and if it behaves in a certain manner, what you as a trader, what should you do as a trader, as a VIX 25 trader. So on the screen there are I came up with 4 simple quick facts, simple steps which you need to take before executing a trade. And let's begin. I'll try to be brief so that we don't take too much of our data. Then yes, the first thing to look at is the market overbought or is the market oversold? A very important one. I think you should apply this one on every financial instrument that you're trading. Is the market overbought or is the market oversold? How do you see when the market is overbought or when the market is oversold? The first, I'll try to explain the first one. I'll explain one of the two. So we'll take the other one as the opposite of what I just explained. I'll explain overbought, and we'll take oversold as what? As the opposite of overbought. Just twisting what I just said in an opposite manner. So overbought is when the market is trading above the intrinsic value of a certain financial instrument. It usually depends on the normal of what the market has been subjected to for a longer period. So for instance, let's take USD ZAR. We are used to ZAR trading at 15 rands or 14 rands to the dollar. That's what the market has been subjected to for quite some time, for a longer period. That's the code, 15 rands to the dollar. That's what we are used to. But then now we find that the ZAR is trading at 18, 19, heading towards 20 rand to the dollar. That's a rapid rise. That's quite a rapid rise, and that rise, it's not small at all. It's quite significant and it's huge. So for me, that shows you that USD ZAR as a currency pair, is now entering an overbought region. So you as a trader, it's your job as a trader to start looking for selling opportunities. That's what overbought means. Something which trades above its face value, its book value, its true value, its intrinsic value. Secondly, look for hidden trend. The hidden trend is usually located in the middle of a congested trend. As a day trader myself, I don't usually opt to hold for long. So you need to find what the majority is not saying, which usually is the main trend. For I think that for VIX 25 to hold VIX 25 for long, if you entered at the wrong or a less fortunate price, I think it will do some serious damage. It has too much weight, as you might have noticed. It has too much weight, and a $50 account, $100 account might be blown in a matter of seconds. Half a candle, half a middle-sized account, half a middle-sized candlestick can do some serious damage to a $50 account, to a $100 account. So unless if you are great at sniper entries, when trading VIX 25, holding for longer periods shouldn't be an option. Unless you are great at finding opportunities where the market, even if the market goes against you, it doesn't go against you for long. It doesn't go against you for long. You are great at sniper entries. You know what you're doing. So usually look for hidden trend, but then don't overlook. Never overlook the major trend. Never overlook the major trend. That's what you shouldn't do. That will be a major problem. Never overlook a major trend. Always look for hidden trend while at the same time taking into account the major trend. And yes, be aware of the major or main trend. Number 3, VIX rarely retest the same price twice. We'll see that when we get to the chart. You will clearly understand this one when we get to the chart. Number 4, commodities and indices follow their own price action. Therefore, you will find that demand and supply zones are more effective than SNR. I often hear people saying that commodities and indices do not respect any price action, and I aim to object. For I think they do respect price action, but their own kind of price action. I don't think it's quite logical or strategical to apply the very same price action the very same price action strategies that you use on currencies, on indices and commodities. I don't think it's quite logical or strategical. So they do respect their own price action. They do respect their own price action. And since they do respect their own price action, I don't think you'll find support and resistance levels quite as much productive as demand and supply zones. For VIX, let's take VIX 25 for instance, or Nasdaq, or whatever, or gold as a commodity, or whatever you index or commodity you might have in hand, you might have in mind. If something doesn't respect what you are used to as a currency, we know that if you were to set boundaries such as specific prices, which usually we regard them as support levels or resistance levels. I don't think something which doesn't respect what is common should have specific boundaries. So the demand and supply zones are regions or areas on the chart. Whereby if that financial instrument fall under that region, you know that even though it doesn't turn around this point, it's bound to turn within this region. It will really break out of this region. So it is trapped within this region, but then I don't have to be specific with the price. So what if I find prices of retest, and if those prices of retest are not so far gone, or are not so far from my entries, then I can easily add positions, or I can use those prices of retest to my advantage, since they are still within my account size, and it will not do much damage to my account size if it does go against me. Let's start by explaining what is a demand zone. A demand zone is defined as an area on the chart whereby a financial instrument has a higher chance of being bought. For me, that's the simpler version of demand zone. An area on the chart where a financial instrument has a higher chance of being bought. I explain it as an area on the chart characterized by multiple support level prices. So since you are looking at a bullish movement, we are looking at a rise. Obviously, there must be lower prices, which, if the market has not yet to rise or has not yet to be bought, there are certain lower prices which the market must retest or must be or might have been or must be heading to before we can get our rise. Then a supply zone is the opposite of what I just said. The supply zone is an area on the chart whereby a financial instrument has a higher chance of being sold, or an area on the chart whereby characterized by multiple resistance prices. You will clearly understand this ones and the tools we use to highlight those areas when we get to the chart on our next video. On our next video, binary.com is a place to be, guys. It's a place to be. No other place to be than binary.com right now. A very effective platform, a very effective way to grow small accounts, a very effective way to raise accounts to an unbelievable amount. VIX 75 being one of the best financial instruments tradable around. You need to be on binary right now. You need to understand what it's all about, what it has, what it offers you, and what it can do for you as a trader. You need to check, you need to be on binary. And there's what I call a trader's ratio, a loss to profit ratio, or I can say profit to loss ratio. If as a trader, for every 100% of your profit that you take, you lose 80%. You need me, my brother. You need me, my sister. You just need to right now. Just text me on WhatsApp or Telegram 0712164712. We need to work on that analysis. For you can have a $50,000 account and think that you are far gone. You might have deposited $50,000 into account. If you're not accurate enough, you'll find yourself at $5 sooner or later. You lose 95% of your capital. But then there's me, where you find me. You can give me $200, a $200 account in no time. 3 days tops or 5 days tops. 20,000, 20K plus profit, 20K plus equity, 20K plus balance. The power of accuracy. So you need to get your information in line, your facts straight, so that you don't just donate, keep on donating on the market. So we'll meet on the next video. Share to anyone you might think might be in need of factual information, real information. For we are about to move right now. We're about to enter into. You're entering into what I call the accurate region where most traders don't find themselves in. So these are the simple basic steps you can take to analyze VIX.
Are you ready to win? Yeah.